Good evening, and thank you very much for joining me tonight. My name is Patrick Nelson, and tonight we're talking about an opportunity to invest in one of the most successful investment businesses in history. And thank you for taking the time. Whilst I'm kicking off, if someone could just confirm they can hear me by typing in yes, that would be much appreciated. Just want to do a quick sound check. Okay. If anyone can hear me, type in yes. Beautiful. Thank you, Martin. Much appreciated. All right. Well, again, thank you for joining us. I will quickly move through. My name is Patrick Nelson. I'm the Managing Director of Reach Markets. Reach Markets, we work closely with numerous private equity and venture capitalists to bring our investors early stage investments or placements that are not available to the open market. We're used to dealing with fairly sophisticated and experienced investors and providing them with the information they need to complete their DD. We also, from time to time, give our investors access to international investments and structured investments such as the one we're looking at tonight. We're the education partners of the stock exchange, and we provide the technology platform they use for their options trading game, which is something we've been busy with whilst that's been open over the last month. And run one of the busier options trading platforms in Australia, and we also work for a number of ASX listed companies, helping them manage their communications to the market. So we do a range of different things, but really at the heart of what we're doing is giving investors access to information so that they can complete DD, access to deals that they otherwise may not get access to. Right, tonight we're talking about an investment which we've had quite a lot of involvement over quite some time. It's been very popular with investors, and also for the people that have gone into the investments that we've run, in most part been very successful. And it's an opportunity to, one, get exposure to international markets, but with an investment manager and an investment management business that's historically been one of the most successful in history and currently on the planet. It's also an investment that gives you capped downside and uncapped upside. Any advice contained in today's presentation is general only. It doesn't take into consideration your personal circumstances, and you need to decide for yourself whether it's appropriate for you. Past returns are not an accurate indicator of future returns. Should you have a question while we're talking, just put it into the chat box. I'll take it either as we go or at the end of the session. Yeah, as much as possible, this is a live interactive session. I'm happy to take any questions that you have. Should you have any questions other than on tonight's session at any point in time, just ask for a call and we'll get someone to get in contact with you and answer those questions. So this investment is, why are Australian investors looking for international exposure? And I think there's a number of reasons. One, if you look at materials sector for Australia, you can see it's 17.6 and 33.43. It's making up, the lion's share of what's going on in the country, banking or financials and materials. Now, if you think about what's happening worldwide and the trends that are emerging and the businesses that have been becoming global players and the most successful, do they just come from these sectors, or are they coming from information technology? Are they coming from disruptive technologies? And they are, and you no longer are looking necessarily for what business is going to be successful here in Australia. The businesses that are coming and disrupting our market are global plays, more and more. And we're going to see more of that. So if you're investing, you kind of want to go where the money is and where those sorts of businesses will develop, and that's not always in Australia. All right. So looking outside of Australia is definitely one of the reasons why. I guess also, there have been reasons for looking more closely at the US and outflows of money out of Europe, the threat of Brexit and the issues that they've been experiencing there. And we're looking at Australia versus S&P or the US market. In the period we're looking at here, the market in Australia did 70% and the US did 200%. Now, sometimes things decouple, and also sometimes the growth comes from the fact that in a particular, in the US, the businesses there are being more successful overall. You know, they're positioned, they're global plays, they're growing and taking advantage of those opportunities. And we're not necessarily seeing that happening to the same extent here in Australia. There are opportunities here. We're not suggesting for one moment they're not, but you might want to get exposure to that. The other reason might be that you're thinking that the Aussie dollar might weaken and you want some US exposure as a result of that as well. So this particular investment is for someone that is looking for international exposure. They're looking for it. They want it's set up in a way where they've got capped downside and uncapped upside, and they want an investment manager that is absolutely world class. And in all of that, I guess one of the things that where, you know, aside from an investment manager, when you go and invest overseas, quite often it's difficult to know the credentials of who's running your money, and also understanding what their view of the market is and what their action plan is going into the future. And if the people behind the business change, then it's hard to also know that is actually occurring. So we'll go into the underlying investment and what you're getting exposure to in a bit more detail in one moment. First, I just want to explain how this investment actually works. So if you wanted to get $100,000 worth of exposure to Berkshire Hathaway, this investment is structured in a way that your net outlay would be $22,950, right? So it's a 3-year term investment. The maximum that you're risking is $22,950. Your maximum upside, uncapped upside, is based on $100,000. And I shouldn't say maximum, just uncapped upside is based, and the initial investment is $100,000. It can certainly be more than that should it go up. And it's a 3-year investment term. And unlike Berkshire Hathaway that doesn't pay dividends, it pays out an annual performance coupon. So if there's performance, it'll pay the performance out, or a percentage of that performance out each year. So you can, and I'll go through the performance coupon structure a little bit later, but you can take your returns as you go. All right. Now, the investment manager is one of the most successful investment management business in history of Berkshire Hathaway. Most of you will know Berkshire Hathaway and will know that it has been run by Warren Buffett. The performance of Berkshire Hathaway has been incredibly strong over an extended period of time, 65 to 75, 300%, 1,300% through the 75 to 85, 85 to 95, 809, and so on and so forth. And these are compounding returns decade to decade, and as a result, people that invested in Berkshire Hathaway have made a lot of money. If you put your $10,000 back in 1965, it would be worth $162 million today. I mean, that is staggering numbers. And we were looking at this initially when we put we went into this investment for the first time, thinking that was a really impressive number. But if we played that forward to 2019, that's $246 million. So it has continued some significant performance on an ongoing basis. And we think that as a business and as an investment manager, there is no reason to underestimate what these guys can do going into the future. I know that going out of, say, 2006, if you put $100,000 into Berkshire Hathaway, at that point in time, it would be worth $284,000 as of, I think, about 6 months ago. And that, you know, that continued growth or continued performance through that period, which is for a lot of us a very, very difficult period of time. But for Berkshire Hathaway, investors continue to be plenty of opportunities, albeit lots of uncertainty through that period of time and lots of volatility of it. Berkshire Hathaway, Warren Buffett, arguably the greatest investor on the planet, arguably, well, you can't say of all time. I mean, you know, define of all time, but he has outperformed the market decade after decade. And if you put him up against the other, you know, there are people that don't appear on charts that have been investors but not necessarily running other people's money or relying on that. But if you look at the main names, the Benjamin Grahams, Templetons, Soros, Peter Lynch, Anthony Bolton, you know, some of the most famous guys. You know, there are people that have done better than him but it's been shorter periods of time. On an ongoing period for nearly 5.5 decades, his performance has been peerless, really, in terms of for that period of time. And this is what we're looking at here is the outperformance of the S&P 500. So what he has done above and beyond the S&P on an annual basis, truly extraordinary. And why is that? What is it about Warren Buffett? What is it about their business that is so good, Berkshire Hathaway, that is so good at managing money and managing businesses? Well, there's a couple of things, and I think having done quite a bit of research into Warren Buffett, one of the things that you get is that he shares his philosophies, he explains what he invests in, he shows the lists of companies that they have in their portfolio. Surely other people can work out what they do, and I guess they do, and there's books written about it. But for long periods of time, they've been able to continuously stick to their guns. Right? They've had a process for valuing businesses, and they've done so. And at the moment, they've got a huge amount of cash. What is it? 116 billion, 119 billion dollars sitting in cash. They've probably got they've been criticised in some quarters for having that amount of money sitting there, but they don't let fear and they don't let greed change their mind about how they choose their investments. They wait and they're cashed up, and when the opportunities arise, they get a history of swooping at the right times and buying businesses with a large margin of safety below their intrinsic value and sticking to their guns and doing it in this manner. So obviously there's lots that you can talk about in terms of how they go about identifying companies with competitive advantages and understanding all the, what they invest in, and also will move into companies that don't like taking a lot of debt. They will buy listed companies, they'll buy shares in businesses and so forth. They do like to control businesses, and they like to invest heavily into different sectors and so forth, and they will get involved in the businesses, and they bring something to the table. So that I guess what they're able to do and what they've been and how they've demonstrated it, and the returns really speak for themselves. So as far as this investment, how is it designed? So ultimately we can see total net cash outlay 22,950 on the right hand side, and on the left hand side investment amount $100,000. So the ingredients that give you the $100,000 investment amount are the interest, prepaid interest, the risk management fee, and the advisor fee, which total at $22,950. And this is an investment where, rather than going and saying, okay, I'm going to take $100,000 and put that into Berkshire Hathaway, or another way of doing it might be, I'm going to borrow $100,000 and put it into Berkshire Hathaway. If I was going to borrow $100,000 and buy Berkshire Hathaway, I would pay interest for doing so, but I'd also be risking $100,000, right? In this instance, what we do is we take 22,950. It gives us exposure over that 3-year period to Berkshire Hathaway. We benefit greatly if Berkshire Hathaway goes up, but on the downside, the worst case scenario is we lose that 22,950. Right? Now, all of the details behind this investment are in the product disclosure statement. If you type in yes into the chat box, we'll email through that product disclosure statement to you, and we can assist with going through and explaining any of the technical details to do with it. Right? So the series that this structure of this investment has been, the first maturity date was in March 2013, so I think it was about 2011 that the first investment was made, and you can see the returns of each one of those investments that has matured to date. And all of them have performed very well, and obviously past returns are not an accurate indicator of future returns, but it's one of the reasons why we like Berkshire Hathaway, is that we can see the evidence of the returns over such a long period of time. You don't have to take $100,000 exposure. You can take a lot more, or you can take less. It just comes down to you. It doesn't have to be a round number. These are just examples of the exposure, so it's absolutely up to you what level you would like to take, and I would encourage you to speak to one of the advisors to discuss the level that you would like. All right. Now, as far as this investment, why we believe this investment can continue to outperform, look, I like to quote, every decade or so, dark clouds will fill the economic skies and briefly rain gold. Berkshire Hathaway doesn't require a market correction to do well. It is done well consistently over time, through good times and through bad times. They stick to their guns. They've got an approach that if nervousness enters into the market, that they are in a position where it'll open up opportunities for them. It allows them to get set into businesses at what they consider attractive prices. And I know I was over in the US a couple of years ago when Wells Fargo was going through its troubles and the Senate hearings that it was going through, or whatever the equivalent is over in the US, and I was watching the grilling that these executives were getting. They were certainly earning their money on the panel, and at that point in time, Berkshire Hathaway significantly increased their position in Wells Fargo, and the spokesman for the business, Warren Buffett, was saying at the time, look, you know what, it's a good business. They've made mistakes. There is no doubt and there's no question that they've done that, and that is reflective in the share price. But the share price, this is a good company, right? It's a good business. It represents, at this price, excellent value, and they doubled down. And as a result, that was a very, very profitable position for Berkshire Hathaway. It's this approach that we see, and the evidence to this is around us as we watch what they've done over a long period of time, in recent times and in times gone by. It's the approach to value, it's their proven method, and it's the ability to handle the different market conditions that we all face as investors. And at times when we're scared, they probably have got the same concerns, but they've got a process to stick to, and they've got the confidence to stick to that methodology. It's also for people, if you want US and broad international exposure, some of the best companies on the planet, in Berkshire Hathaway Invest In. It's a way of getting exposure, significant exposure with limited downside risks, and you're in one of the most successful companies on the planet. And again, 22,950 net outlay gives you $100,000 worth of exposure. It's the maximum risk is 22,950. It's a 3-year investment period, and you know what your uncapped upside is. The investment also can pay out an annual performance coupon. So, as I mentioned earlier, unlike Berkshire Hathaway, we have to wait until once you sell your stock to realise your gain. The performance coupon gets paid out. So if there's a positive performance on an annual basis, it pays out a performance coupon. We're just looking at Series 25, which paid out last year. The performance coupon at that period of time, in the previous period, it paid out a performance coupon of 12% in April. And that was returned to investors. So there's a performance fee attached to it. When all was said and done, investors received back to them 11.64%. So that's 11.64 on the 100,000 uncapped upside. So if you had that position, $100,000, $11,640 is returned. And then the reference asset, so at the time it was roughly, I think in April it was worth about 136,000, something like that, paid out 12%, and after that payment in May, the reference asset was valued at $126,000. So the uncapped upside was still there on $126,000. So if it went up from that level, great, it could pay out another coupon, or if at the end of the 3-year period the reference asset was sitting up at 126, it would pay out the 26, right? So if you had 22,950 was your investment to get your $100,000 uncapped upside, on the paying of the 11,640, that's obviously significantly reducing the capital at risk, i.e. you don't have to wait to the end of the period. If there's really strong gains in there, you can take that's getting returned to you as you go. And so if you have 2 payments like that, you've got your money back and you've still got your significant uncapped upside on $100,000 or more. Right, and it's one of the reasons why a lot of people like the structure of this investment is that feature of being able to take a yield on it as you go. Additional features, someone had asked, John's just asked, can you use your self-managed super fund? Yes, a lot of people do use their self-managed super funds for this type of investment. There's no obligations. There's quarterly liquidity, as you don't have to wait to the end if you want to close out of the position. You can close out early. Attractive interest rates, and you've got exposure to the AUD-USD exchange rate, which for some people is very, very important. All right, so that's an overview. It usually takes 20 minutes. It's taken me 20 minutes to give you an overview of the Berkshire Hathaway investor. has anyone, Peter's asked a question, what would be the minimum? Speak to the advisors about that. The minimum generally exposure is like 50,000. I think they can do slightly less than that. You need to speak to Michael or Blake or David about that, whoever you usually talk to. What would be the maximum is the next question. I don't know the answer to that. I have asked in regards to different products before. When we've been doing hedging products, there have been some pretty big investors that have come in. But I imagine, Peter, that you could probably get set on exposure to probably around $10 million without too much problem. If it was needing to be a larger exposure amount than that, then just speak to myself or one of the guys about it, and I'll speak to the product manufacturers and coordinate the conversations with the investment banks behind it. So yeah, that's no problem at all. Okay. If you would like to receive the PDS, and you haven't already, a couple of people have, but you haven't already typed in yes, type in yes with the PDS out to you. If you've invested in a product like this before, one of the structured products, or you've got an open account with us, just nominate the amount of exposure that you would like, and we can pre-populate the paperwork for you and get it sent off to you. Then you can just read the prospectus, and if you're happy with everything, sign and return. So if anyone would like that, just put in the amount that you would like exposure to, and I'll organise for the paperwork to get put together. Are there any other questions? Is there anything else that I can assist with? Otherwise, what I'd recommend you do is have a read of the prospectus. If you haven't received that already, type in yes into the chat box. I'll get that sent across to you, as well as all of the investment centre. Peter, this closes, it's a very good question. Technically, it closed today, but by Monday is the date that you really need to be organised by with this particular with this particular one. Yeah, Peter. Yeah, Peter's just saying, he's concerned about currency risk. Yeah, look, it really comes down to your view, but we don't mind having international exposure in there. It sort of swings and roundabouts in some ways, but that's probably a conversation that we can shed some more light on if you so wish. But you've got to have a view on these things, so respect whatever that might be. Any other questions? Anything else that I can assist with? Whilst just closing off, look, it's been an investment that's been very popular with investors that are looking to get international exposure. One of the things, aside from Berkshire Hathaway and so forth, one of the things that's really important to me when I'm looking at making an investment is knowing who's running the money and knowing how the business communicate with investors. And a lot of businesses are pretty closed shop about who the people are in the team, updates on what assets they own, what their outlook on the market is, and the like. Well, Berkshire Hathaway have been very open about what their view of the market is, what they own, where they're moving money, and the like. And that's one of the things. But Peter's just made the comment, Berkshire Hathaway have been flat for the last year. I'm slightly concerned about that. Look, whether it was going up or flat, I guess, to me, Peter, is if, when you're setting up an investment, why would you look at Berkshire Hathaway? Well, if you're looking for international exposure, right, and you're looking for a capable investment team to help give you exposure to that market, we think Berkshire Hathaway are an excellent way of, and an excellent safe set of hands to manage that investment, right? And so if I'm looking to go into the market and I'm looking for someone to do that, then I think Berkshire Hathaway are an excellent way of doing that. If the market is ticking up but volatility is increasing, people will go to a safe set of hands every day of the week, right? And I think that bodes well for Berkshire Hathaway. Then there's been a period of time where their performance hasn't been amazing, but that's absolutely fine. They'll go through swings and roundabouts. So the company's been around for a long period of time. There have been periods where they've been a bit flat, but overall, their methodology, we believe, is very, very sound. We like it a lot. And this investment is structured in a way for someone that is looking for that international exposure, likes the structure of the investment, and sees Berkshire Hathaway as being an excellent way of being able to give them that exposure and a safe set of hands, and with an excellent performance history and all the things in place we believe to have the right mix to move forward. So take the point, but I guess that's our view. With anything, I think slightly concerned is a constant. In what I look at all day long in all the different businesses that we review, and slightly concerned or trying to understand or trying to make that decision is the right attitude to go in. So could understand that absolutely. Beautiful. Any other questions? Is there anything that anyone else would like? Peter, sorry. That question. Close your date. You need to sort of get paperwork back Friday, Monday at the latest to participate in this particular. So it is getting to the end of closing off. If there's anything else, happy to answer now. Otherwise, I'll call the session to a close. Thank you very much for everyone attended. To everyone that's asked questions, much appreciated. And if you haven't already requested the PDS, type in yes. We'll get that sent out to you. If you'd like to speak to one of the advisors, type in call, and I'll organise for them to give you a buzz. Okay, John, what time was that? Yep, okay, we'll call you at 11 tomorrow. Anyone else, just type that in and we can get you at a time that's suitable to you. Otherwise, thank you very much for attending. Have a wonderful night. All the very best. Thank you.